Hey traders, this is Houston Strong from the tradingedge.org, and it is May the 8th, 2019, and coming to you on this Wednesday to give you a quick market update. We're midweek now, and it's been a very interesting week so far as we've broken some levels that may indicate potentially further weakness. So let's get into the charts now and see what they're telling us. So give a bit of a recap of where we come from and potentially some levels to look at as we move towards the end of the week and towards next week and towards the end of the month. So today the S&P and most of the indices did nothing, and actually, to be honest, I took the opportunity to actually go see a movie today. I went to check out the latest Avengers flick, Avengers Endgame, and I must say it's a very good movie. The only problem with that movie is that they set the bar very high for other comic book movies. So good luck to other Marvel franchises. You have your work cut out for you. The Avengers Endgame movie, they packaged up 10 years worth of the franchise history, and they did a really good job of packaging it up into one finale. So kudos to Disney for putting that together, and good luck to other Marvel in comic movies to outdoing that movie. So anyways, going back to the charts for a second, so I'm glad I took the day off, and to be frank, I did take my lumps this morning, and I'm happy I took the rest of the day off because as I blogged on the website before I took off, the title of the blog was Headline Risk, and that's basically what we're facing now for the rest of the week. And and to be honest, we now have headline risk back on the table again. So we had a nice run from the basically late December all the way to to May, where the headlines weren't really in play. We had a few headlines here and there, but at this point here now, you can clearly see that they're becoming, as the market has less and less fundamental news that's driving it. It's looking for new news that's not baked in yet, and so we have the barrage of tweets that are coming from the the U.S. president and the whole U.S.-Chinese tariff war, and that's really setting traders on high alert. So today, because we have those meetings to take place in Washington on Thursday and Friday, we were left with pretty much an indecision day. Look at the SPY, right? We have that doji basically went nowhere today. It lost 20 cents. So let's get into the charts now. Let's take a look at what it's telling us. So at this point here, let's begin with the VIX, and then we'll get back to the SPY. So as always, on the VIX, we're still in this. If we take a look at the 3-month chart, this is the issue, and this is what I've been warning about: is that this pattern on the outside, inside, and down is only in force if it can stay below the low of this inside bar. And now we've cracked back into it. And so now you're at risk of this thing coming back through the range again. So once it got back into, the low here was 28.12. All right, so I'll just maximize that. I know there's not a lot of bars to look at. But once 28.12, once it got back in there, then that signal is no longer in force anymore. So if we look at something like the daily chart, there are a lot of gaps that are unfilled. You'll see this to the upside and to the downside on the SPYs and the other indices. So the first gap target was this one here, 28.05, and it took it out on Monday. So it gapped up, took that guy out. It actually took it out on the pre-market, then came back in. And then the next day popped up again, took out 30.19, right? And then we have another one here, 32.24, really close to taking that out now. And this is the one that's put in way back on March 25th here. And then we have another one up here at 33.23, and then we have others up here. So that's the issue, right? So as I've been warning with the VIX, is that once this thing flips and you have full time from alignment, right? So when I say time from alignment, we talked about it already. We talked about the quarterly chart, right? Where is it trading in relation to that open? The open is this blue line, okay? So that blue line is the quarterly open. That orange line down here, let's go on a monthly chart here just to make it really obvious. I'll zoom in. Okay, so that orange line is the monthly open. The purple line is the weekly open. it cracked above the quarterly open now. So now you have full time frame alignment to the upside. So at this point here, the trend is up on all the major time frames. And so you definitely, at this point, it is open season on VIX. This is when you can actually trade this product. When you don't have this full time frame alignment, VIX trading is very tricky. But now, when you don't have inside days like this, you can expect range to happen. So, when VIX starts kicking things off like this with a 16% day, when things are in full time frame alignment, you can expect these things to happen. So here, look what happened here, right? So this day here, back in December the 4th, was a 13% day. You get this day here, it was a 7% day, right? So you have these big 4% days, 5% days, 5% days. So when you have full time frame alignment, you can expect these big green days. Like these moves here, 16% followed by a 8.5% day. So this is what can happen if you stay above these levels. So definitely, this is the trading environment that's great for traders. It's, volatility now is paying the bills. So watch the VIX, continue to watch it, and on the unfilled gaps, they create great levels, right? So as we've been talking about, we had this big broadening formation that was playing out, and it finally cracked above it, right, and stayed above it. So it cracked above here. We talked about this over the weekend. It cracked above, had 1 day above it, 2 days above it, then it broke below on last Friday, but then on Monday cracked back above again, and now it's been staying above, and now it's coming back through the range. So that's the VIX. You have the opportunity now, if the push this thing, if the buyers get really aggressive, if the bad news keeps coming out, then expect the volatility increase and potentially going back through the range again. Anyone who's short VIX products is going to be in a world of pain here, and that could be the home run trade to put on here once again in May, is to squeeze those guys who are short volatility. And so that's the name of the game right now. How does this day here, all the indices and a bunch of sectors, end of the day inside days? There's a lot of indecision now. We had that expansion, now compression. Now, how does it expand again, right? So can it break outside of this range to the upside or to the downside? That we need to wait and see. Again, and you want to see a trade above this range or below that range. If you're trading inside, doesn't matter. If you break above and get back in again, it's still range trading, right? If you break below, it comes back in, it's range trading. You want to get outside today's ranges to get range expansion. Let's talk Spider. So Spider, basically, if you take a look here now, that's the all-time high, 293.94. So back to the monthly chart for a second here. That's the monthly chart. So here's the risk, right? So it went inside bar and up. You're still trading above the high of last quarter's high. So that's, this signal's still in force, but the buyers are going to need to defend this area here at 285.18 if they want to keep this signal in force. So I'll just draw that area here. Let's draw it in, 285.18. We'll put that back in blue, so you can see that on the chart. So we're getting close to that area here now. Now we drew this ascending trend line for a while, and that's basically our broadening formation. So if you can see this big broadening formation here, we're trading inside this big broadening formation. We came up, so look at the 2-day chart. We came up here, and then we've come back and touched exactly this broadening formation's ascending trend line, right? It's tapped both those lines now, and it's currently holding. So Monday was an outside day. How is it going to resolve? To the downside, and now it's continuing down. So this again is, if it breaks through these ranges, you're coming back through this potentially, right? So we need to wait and see here. Can the buyers defend this area, especially 285.18? Otherwise, it's going to get ugly because you've already taken out the weekly lows. So the weekly lows have already been taken out, right? So that is already of real concern. Now, layer on, if you're, the fact that the quarterly open is right there, right? So here, that blue line, which is right below the inside bar high, the 3-month inside bar high is right there. So once this thing breaks down, if it breaks down below that quarterly open, then you're going to have that full time frame alignment to the downside on all those time frames, quarterly, monthly, and weekly. So again, we're setting up some great conditions to be a short seller here, because once those things there's a confluence of these things, it means you trade below all those time frames across all the indices, then you can have confluence across all time frames, all indices, and then any pop can be shorted. And you're going to basically look to short any single pop because you're in a clearly defined downtrend at that point. So it's going to be especially powerful. We still have a few months to go here, but eventually, if this thing fails, right? Imagine we still got 2 months left in the quarter, but this is setting up as a potential failed inside bar break to the upside. We're going to revisit this, in a couple months. But the challenge, the risk in a couple months is that this thing then turns from an inside bar to something that could either be an outside bar, or it ends somewhere in here, and then they break it to the downside and cause an inside bar reversal, really trapping people who got long up there. So let's wait and see what happens there. Lots of time to worry about that scenario. But for now, red month, so it's not been a good start to the month for if you're a buyer. Red week, so at this point here, the only thing holding this thing together are these levels, right? That ascending trend line, that quarterly open right there. That's what you need to watch for. We have 2 days left. If we have some bad headlines come out, then this thing could break down, and we can get some really good action into this range here, because we know that this was a great rally, and now would not be surprised to have this thing pull back, and take out some of these longs here. Because people are long from a long ways. Maybe some people are chasing, and these guys are going to be the first to get stopped out. So each one of these pivots here have stops below them. We're going to want to wait and see if we can take out some of these pivots. Because look at that pivot right here. It's an unfilled gap right there. 282.48 would be a great pivot to take out, right? $5 away. Qs, same scenario as the spider. It hit all-time highs before teetering out and peaking out. And now we've created this kind of a descending trend line to the downside that is sitting below now the all-time highs, the previous all-time highs. So the previous all-time highs had acted as resistance. We broke above that. It came back. It touched it. So I'll look at the daily chart here. It touched and acted as support for 1-2 touches. Here's the issue. Now you broke below it yesterday. It tapped it a bit, could not close above it, and now you have an inside day, could not even come close to touching it. Now that looks like it's become potentially resistance. So now you're left with this scenario here where you can just inch your way back down again on that daily chart. Inside day, we want to again see how it breaks. It's still far though from its quarterly open, so this chart is looking better. But again, you're below last week's lows, so these pivots are at risk. So these guys here, 184.62, the low here was at 184.51. So anyone who put their stops below this pivot got stopped out. So now you're going to wait and see, can these stops here get run if they can keep pushing it this week. You do have this a bit of ascending trendline support here. Okay, this actually, if we take a look at it, this particular trend line, let me go back a bit here if you can see it. Goes all the way back here, back to September's highs, October's highs. We link our tops together, and now we have a situation where we have bigger broadening formation potentially playing out, right? So from here all the way to down there, you see that potential range that's possible if they really decide to rip it right back through the range again. So that's still a scenario that's less probable, but you have that situation now because you have this scenario where you had a outside, inside, and up on the 3-month chart. If it can break back through here again, it invalidates this long signal, and then if it can break below this low, or if it continues to come back down and creates an outside quarter, then it's potentially go there to take after that low there. But that's still a long ways away, and we have a lot of good trading that we can be doing before we need to talk about that scenario. Okay, so that's the Qs in a nutshell. Continue to watch that quarterly open. If you're short this, and I am short the Qs via puts, and then this is an area you want to be looking at here, at least to the quarterly open, and you want to see if they can fill this gap right there. Okay, so the gap here is 179.66, so right there, 179.66. This area right here. Okay, right below the quarterly open. Russell gave a really interesting sell signal this past week. And so here's the scenario with Russell, right? So with Russell, it had been inside quarter and up, came back into the range again, invalidating that inside bar and up status. Now on the daily, if you know or you don't know, we had that big outside bar that was put in on Monday. So things look pretty bleak there on Friday. Well, things look really good on Friday. Then Monday looked pretty bleak as they gapped it down. The buyers brought it all the way back up again, and to the tick. This is the trend line I've drawn a long time back. So I drew this trend line from this pivot high to that pivot high. So this high, is lower than this high. So we get our ascending trend line. It hit it to the tick. So it hit it to the tick on Friday. On Monday, it could not break above that. This outside bar is a momentum pattern. So if momentum does not continue, then you can expect it to be a reversal. And so this took a lot of buying power, and the fact that there were no more buyers left, you got this subsequent pullback the next 2 days. So the next day we had that, basically a gap down, and it closed lower. So you had an outside day and down. Now you consolidated today. So this is a bit of a red flag now, because now on the weekly charts you don't have a lot of saving graces. So in the weekly chart here, this is even, this is a really nice failed momentum pattern. Went outside bar and up. We talked about this just now, right? Outside bar is a momentum in pattern candle, because it shows you that the buyers and aggressive, sellers got aggressive at both ends, and the buyers in this case won that battle because of the green bar. And then it went up. So last week it went outside bar and up. This week we saw what happened on Monday. They were able to break it right a little bit above last week's highs, but as soon as this comes back in, anyone who bought up there got trapped. And so those are your late longs that got stopped out in this move down here. So now the pivots that everyone's going after are these two: last week's lows and then the previous week's lows. That's going to create a new broadening formation if this low gets taken out. So there is your smaller broadening formation playing inside a bigger broadening formation. So this is a very, very bearish pattern for longs, because now you're just hoping that this low doesn't get taken out. That's just not a good strategy. The easier trade now is to the downside. So look for those opportunities. Again, how does this inside bar break, right? Inside bar on the 4-hour chart as well to end the day. How does this guy break? And tomorrow, where does it trade in relation to yesterday's range and the last 4-hour bar range? Okay, I'm going to show one more index, the Dow, and then we'll do a handful of stocks, and we'll call it a wrap. Because we still have 2 full trading days, and there's no point to go over too many charts. So the Dow, here's the issue with the Dow. So on the monthly chart, we do have this failed inside bar pattern to the upside. So this is what I've been talking about, the risk of what could happen on the 3-month charts. It's happening here on the monthly chart for the Dow. Inside bar and up, right? Then it went down. It took out last month's lows. So we did get a slight higher high here. So the high here is 266.81. The high here is 266.86. Oh, is that right? High, yeah, 81, and this is 86. Okay, so this is actually, exactly, this is a picture perfect inside bar reversal. Okay, so this is actually lower than that. Yeah, this high is lower than that high, and so there you go. The buyers could not break above this last month's high. They took out the low now, and now they're going after this pivot here. So very, very bearish condition for the Dow, because you're also trading below the monthly, the quarterly open. So now, if you look at the daily chart, you're trading below the quarterly open, below the weekly open, and below the monthly open. So you can see once that monthly opened up, right, it was selling season. Basically, once a new month started, right there on Monday, 2 Mondays ago, that was, not 2 Mondays ago, but last Wednesday, that was the first of the month. It was still midweek, but once that new month started, it flipped, the open of the month to this area here, immediately traded below the monthly open, and then they proceed to sell off. So even if the bulls can mount some sort of comeback, right? So let's say we end the week somehow positive on the week, all right? How do you reclaim this month's open? how do you turn the month green? Because the monthly levels are way up here, right? So it's far away. So it's quite difficult now to try to rework to reclaim that. So look at the weekly chart. Last week we had this outside and down situation. Now this week here, we're now trading below last week's lows, right? Below the quarterly open, below the monthly open. So at this point here now, it's definitely a bearish trend, a short trend. Short side is the short side you want to be trading predominantly on the Dow. Okay, let's talk about a few more instruments, and then we'll call it a wrap. So I talked about XLI as a sector to watch this week, and sure enough, XLI got hit this week. So we're talking about on the weekly video the outside-inside pattern that had formed on last week's bar, and so we wanted to see how that was going to resolve, and it's resolved to the downside. So a bunch of industrial names now have been hit, and the sector looks very, very weak. So you're setting up this potentially to be another inside bar reversal type of situation, right? So there's your inside bar back in March on the month. It broke to the upside in April, and now in May you're going inside bar, but if it breaks below last month's lows right there, it turns into a reversal, and they're going to go after that pivot, then that pivot. Look no further than our friends, let's say Cat and Deere, as leading industrial companies. Those charts look very rough. So there on the monthly chart, there's your reversal on Cat, inside bar and up, reversal right there, boom, coming back to the range now. So that is a very, very weak looking chart, and again trading below the quarterly, monthly, and weekly open. Look at something like a Deere, same looking type of weakness, and it looks even weaker than Cat, to be honest. But there, inside weak and down on Deere, and you can see just from this week's trading, the last 3 days, down, inside bar, but predominantly down, and the trend is down on these two names. Okay, next name. Let's look at some tech names now. Facebook, right? Facebook here looking weak as well, potentially setting up something that looks like this. So this here, you have inside weak and down. It's now cracked the weekly and monthly levels, and so here you have to watch out that you don't create the situation now that's below this low, you're going to go after this pivot below there. Okay, so Facebook looking very weak, and looks like it could be the beginning of something. Micron even weaker than Facebook. So Micron here, look at the weekly chart, outside weak, inside, and down. Okay, so it took out this pivot low right when it opened up, on Monday, Tuesday, took out that low here. Then if you look at the monthly chart, this is the problem with Micron. It's outside and up. The momentum failed. They're coming back to the range again. Now the low in play here is here, 36.57. So they're going after that pivot low. So Micron's definitely a name to keep on your short list. Utilities got hit. So if you look at the monthly chart on utilities, this was a sector that had been leading for a long time, and now look at the utilities. All right, so here you had been making new highs all the way up until March here, and then in in April, you had an inside month, but it ended up very strong. Now look at May, right? So you can see what happened in May. Now it just took out last month's lows. That creates the inside bar reversal. There's on the weekly chart. There is our outside and up, failed pattern. Momentum failed here, broke down, took out that low. So when you see an index like this getting weak, you can look at the individual names. Look at something like Dominion. Look at the selling in Dominion this past week. See right there, outside and up. Once it broke below there, it's a sell, and today was just a sell all day type of session. Same thing with NEE, Nextera, same situation, strong selling, same side of scenario here. On the monthly chart, it's outside bar, so basically it went inside and up, failed on the same month, and now took out this month's low, creating this pattern, outside and up, back through the range again, and now trading below all the major time frames. Let's do a couple more names. Twitter, looking very bearish. So this one's very, could be the beginning of something for Twitter. So keep this on your list. Outside and up. Now it broke through last week's lows. So this could have some time to play out. So keep this one as a potential short. But again, it had an inside bar today, so tomorrow could be a good one to watch. If it breaks below yesterday's or today's lows, it'll get us back into this range. If we can get back in this range, we have all to go after here. Okay, all the way here to the lows of April 22nd. Financials, like another sector that have been doing pretty well. Unfortunately, for financials, look at the weekly chart. Outside and up, came right back through the range again. Okay, and today, look at the selling. I think most names got hit pretty hard near the end of the day there. But the financials, this doesn't look like a good place to be right now. So certainly watch out for what happens to these financial names. Look at the last 30 minutes of trading. They just basically evaporated all the gains they had from most of the day. So watch out for financials, because an easy pivot to go after is that one there, and then the quarterly open. And let's do one final name, one that I blogged earlier this week to watch out for, and that's emerging markets. Just a quick update on that. This is playing out exactly as we had alluded to on the weekly video. To watch out for is this outside and up pattern. Once it fails 43.35, that's a red flag, and it's dropped a buck since then. And so 43.35 got broken on Monday. They gapped it down, right? It came up, looked like things may have been repaired, but the red flag was that it never reclaimed that level. It touched it and closed below it, even though it was a big green bar. So since then, we know what happened, right? We had a really big down day on Tuesday, close to 2% down, and then we had today's consolidation. Which way does it break? Again, this tracks Asian countries, so whatever the headline risk, whatever headline risk there is out there, this is going to be a name that's going to be very, very susceptible to any of that risk. So track this name and some of the other Chinese ADRs for the potential shorts if this thing continues to break to the downside via this inside bar consolidation day. All right, so hope you're having a good trading week so far. Safe trading, and keep up to me on the blog. I've been blogging more. If you have any questions, drop me a line there. And happy trading for the rest of the week.